If you're about to trade the New Zealand dollar against the CAD and you're looking at the 4 hours and 1 hour alone, you might be entering a trap. Why am I calling it a trap? Well, that's what we're going to be looking at currently from a higher time frame to see the bigger picture and also the fundamental background of what's happening in the New Zealand market and in the Canadian markets. We're going to start off by looking into the New Zealand dollar itself. What is happening in this economy? Well, from the surprise engine, what we can see right here is that the New Zealand dollar is extremely weak. Extremely, that is the key word. You can see the weighted score at negative 0.62 and the COT is severely crowding on the sell side of the New Zealand dollar. You can see the New Zealand dollar is reading over the period of days and we see how it's dropped drastically ever since the 5th of August. You see everything is red. It means they are having difficult times keeping up this economy bolted to the ground. Now we can go look at the Canadian dollar. Now looking at the Canadian dollar, we can see an economy that is slightly better. Not all that great, but at least slightly better. It's been getting a better score ever since the July 31st move. And we can see that the score is currently slightly green at 0.21%. Even though the COT leverage funds are still crowded short in this same currency. So they are both crowded short on both currency, and yet one is heavily much more crowded short and the other one is less crowded, while the New Zealand dollar is experiencing red times across board compared to the Canadian dollar, which is only experiencing bad times in the inflation data. So when you put both scores together, what do we get? Well, we get a fundamental bias of negative 8.3, which is very negative as you can see, and the COT pair is actually still negative. That's why the signal for COT is saying it's in between. I can skip looking at the COT data. The daily region is choppy, you can see the yellow bar, and the 4-hour region is to the downside, meaning this market has a choppy to bearish move. As you can see clearly here, the employment, economic, orders and inflation bias all point in favor of the Canadian dollar. In this case, it is the quote currency, giving us a final rate score of -4. That is a strong negative score we are seeing here this morning, saying that this currency this morning is fully reading a sell market. Now with this knowledge in mind, let's go look at the chart. Here on the daily time frame, what do we see? We have the entire leg we need to look out for right here. This is the current swing leg, and we can see that it is a bullish move to the upside. In its bullish move to the upside, he left behind about 3 different locations. We have these first demand locations to buy. We have a second location right here. I didn't mark that one out before. And then we have a third location to buy from at the extreme. I always love to give the extreme the best coloration because that is the best place to actually place a buy in the market. Now we can see price is really returning into this first zone available, and it looks like it is beginning to somewhat respect the zone. So let's validate this by looking into the 4 hours. So you're over here on the 4 hours, the current swing leg is still the same swing leg as that on the daily. Why is that? Well, price has not found a way to go above this high, nor has it found a way to go below the low available here, aka it hasn't broken the first demand zone. But here's the trick. If you're looking to buy from this zone, I think that is the trap itself. Why? Let's take a good look at the rate of what has happened on this 4 hours time frame. We see price rally up, pull back and rally up hard. We see a second pullback, a rally up again, and then a break of structure to the downside, which is the current move we are currently seeing. There's one thing we have not seen. We've not seen price made a retracement into the zone to continue to the downside, aka it has not created a new reason for it to form a new leg. There are only 2 ways it can create a new leg. One, either it retraces back into this whole area and then pulls down, or it finally just breaks through this one for us to know that the 4 hours bearish move is really complete. But the 4 hours bearish move has a long way to go, because if you squeeze this chart a little bit more, you would realize that the extreme is still far below, and that gives us one situation here. The situation we can see here is that price never gave us a good retracement to sell. I'm not saying it must. What I'm saying is, without that retracement, I cannot place a trade. What is happening here is, for us to agree that this market wants to really start an uptrend, I would want to look into the 1 hour and see what it is doing. So over here on the 1 hour, we're beginning to see a likely start of an uptrend. Take a good look at this situation. We have a push up, a pullback, and a break above that structure, which some people will consider a really good move. However, take a good look at the very last move made here. We have this push down, pull up, and break of structure to the downside before connecting this. For this to be considered a good reason to buy, I need price to actually break above this high. So when price does the move and finally breaks above, whatever retracement it makes is a good buying location to take price at least to the 4 hours opportunity first before we start looking for any other thing. So that whole view was just looking at purely the technical situation. However, you need to pay attention to what the fundamentals said. It is a bearish market. So everything we just explained right now, we can take it with a grain of salt, because we know that for a fact this market has much more tendency to go to the downside, aka every move up to me is price just coming into this high 4 hour zone so you can finally sell to the downside, unless we have one condition: the market finally decides that it wants to flip bullish after all of this. But flipping this market bullish is going to take a lot of news in a good direction for the New Zealand dollar. So I hope you don't fall into the trap of just going blindly to buy the New Zealand dollar against the CAD and run into losses. If you did enjoy this video, do well to hit the like button, subscribe to the channel, and share this video with someone who you think may find this knowledge valuable to their trading career. See you all in the next one. Peace.